Hello, good morning everyone. I hope you all are good and you watch the video lectures regularly, and I hope you have been doing your homework on regular basis. We have been doing chapter 6, that is retirement or death of a partner, and in today's lecture we are going to start with illustration 20. In the last lecture, we have finished illustration 15, and this is the first lecture, that is first part of illustration 20. I hope you all understand that these are the long sums and it is not possible to finish a long sum within a single lecture. Yes? So this is the first part of illustration 20. This is given on page number 241 of your textbook. You should watch this video completely till end for complete understanding. This is what I say in every lecture. And the new topic for today is, the new adjustment in the current sum is when the capital of the new firm is to be kept in new profit and loss sharing ratio. So far, whatever adjustments we have done did not include this concept. Yes, this is the new concept in today's illustration. Rest of the things, they are probably same. As I mentioned clearly in the last lecture, that we are not going to repeat all the similar things again and again in every sum. By now, we know very well which are the accounts to be prepared, where to write the opening balances. You are supposed to solve all the adjustments, you are supposed to distribute reserves, you are supposed to obtain gaining ratio, how to total the sum, etc., etc. We have been learning this procedure in each and every sum. So that thing I am not going to repeat in this sum or say in this lecture. Yes, but pay attention to the point mentioned on your screen. When the capital of the new firm is to be kept in new profit and loss sharing ratio. This is the new concept in today's sum. Alright? So this is your question. It is given on page number 241. I hope you all have your textbook, a writing book and other essentials with you when you watch this video lecture. You should be ready with every essential thing, which also includes a calculator. So this is your question. These are the adjustments given below. This is the 8th adjustment, which is completely new. New firm's total capital will be equal to total capital of old firm. The entire capital of the new firm is to be kept in new ratio. Yes? So this is the new concept for today. This is the last adjustment. So obviously we are going to do the 7 adjustments first and 8th adjustment in the last. And what we are supposed to prepare, they have instructed clearly that prepare revaluation account, capital accounts of partners, bank account and a balance sheet. So this is the revaluation account. You can see well on your screen. This is partners capital accounts, then you have a bank account, and this is the new balance sheet. Further, we have the working notes. Alright? Fine then. Let us begin with the sum. Okay, this is your question. You are supposed to prepare revaluation account, partners capital accounts, bank account and a balance sheet. So the very first step, You are not supposed to write down the journal entries, so you will not prepare a format for journal. You will move to the second step directly. I have taught these the steps for solving a long sum in the second lecture of chapter 6. If you are not aware of this, you must revise the same. The video lecture is available. It is being recorded. It is being uploaded. Okay? Alright, so you will draw the necessary accounts. Then what is the next step? That you will record the opening balances. Opening balances of what? Capital accounts and bank account. Let us check. This is capital accounts of partners, and below you can see it is bank account. Bank account debit side to balance brought down 40,000. And in partners capital accounts by balance brought down 2 lakh, 1,20,000 and 80,000. Done with the opening balances? Yes. You should put a tick mark over the things that are done. Or else I would say, if you are having your pencil and if you are not writing in your book right now, maybe you have a thought that you will write it later. Right now you just focus towards understanding. Even then you should have a pencil and you should put a tick mark in the solution also, which simply means that this is done. This is not to be repeated. It is already recorded. This will lead to less confusion. Things will be easy. Fine? Okay then. The next step is that you are supposed to obtain gaining ratio. Now for that you need old ratio and a new ratio. Yes, let us check what is the old ratio of the partners. Okay. They've said that the partners are sharing profit and loss in the ratio of their capitals. Understand? Ratio of their capitals. Pay attention. You can see the capital, the balance of capital is given below in the balance sheet. It is 2 lakh, 1,20,000 and 80,000. You have to obtain the ratio on basis of this. So 2 lakh, 1,20,000 and 80. What do they have in common? The 4 zeros. Yes? So the 4 zeros will be removed. What remains? It is 20, then 12 and then 8. 20, 12 and 8. They appear in the table of 4. All the 3. Yes? So the ratio will be 5:3:2. I have divided this with 4. Divided it by 4. 4 5s are, 4 3s are, and 4 2s are. So the old ratio is 5:3:2. You should write it down in your writing book for now, so that you don't forget it later. There are ample of calculations based on this in the adjustments given further. Okay then. So we have obtained old ratio. We are provided with new ratio in the very first adjustment, if you can see on the screen. And you must be also having your textbook. You can even see there. The new ratio of Karan and Fenil is to be kept at 2:3. So things are easy now. You know very well how to obtain gaining it is simply new share minus old share. Here it is. You can see in explanation, gain equals to new share minus old share. I hope you all know how to find out this. This cannot be taught repeatedly all the time. I clearly mentioned in the last lecture that we'll be understanding only new things, new adjustments, variations appearing in the sum. Similar things will not be repeated again and again. So here the calculation shows that current is sacrificing and phenyl is gaining. There are three partners, of course. Farshid is retiring. So remaining two should be gaining, but instead of which Karan is sacrificing. The calculation shows this. This is not a new concept. Yes, it appears in the previous sums that we have studied, and if you don't remember this, go back to the video lectures, revise the same. Make sure that you are aware of the facts presented in the previous lectures, and if not, then you should not study the current video lecture unless and until you are done with the previous lectures completely, to avoid a feeling that nothing is understandable right now. If you have studied the previous lectures perfectly, then there is not a single thing that you won't understand in the lecture going on right now. Alright? Fine then. We'll start with the adjustments now, as we have obtained gaining ratio already. The very next adjustment is about goodwill. This is the new value of goodwill. How do we deal with goodwill? The share of retiring partner is to be given by the continuing partners in their gaining ratio. So first of all, let us find out the share of the retiring partner. Alright, so the new value of goodwill is 80,000. 80,000 into the share old ratio we have already obtained, which is 5:3:2. Yes, and as per this, the amount of goodwill payable to Farshid will be 80,000 into 2/10. You can see the old ratio is mentioned, 5:3:2. On this basis, you will obtain the amount of goodwill payable to Farshid, and you will write down the necessary journal entry, the only one, and you will post it accordingly. Alright? So you will solve this on your own. You will post this journal entry in partners' capital accounts that we have prepared. You are supposed to do this on your own, as I said that it will not be repeated in each and every sum. In case if you have any difficulties, you can write it in the comment section, or else we can also solve it in the doubt session which is conducted on a regular intervals. Alright? Fine, let us see the next adjustment. It is paid rupees 60,000 for patents during current year, which is for total 4 years. Alright, this seems to be new. 60,000 paid for patents. You can see here it is 60,000 in the balance sheet, and they say this is for 4 years. Yes? So 60,000 is for 4 years. Once you will divide 60,000 by 4, the answer will be 15,000. So what is the amount paid for current year? 15,000, of course. So the first effect on debit side, to patent account, 15,000. The second effect, of course, in the new balance sheet, this is your new balance sheet. The value of patents, you can see 45,000 minus 15,000, and it is written 45,000 in the outer column. The new value of patents. Let us check the next adjustment. Machinery is to be depreciated by 10%. This simply means that the value of machine is to be reduced by 10%. This is not new. You can do this on your own. Fine. The next adjustment. Bad date on daters is to be written off rupees 3,000. Let us check the position of daters. Daters, it is 35,000. We have a reserve of 5,000, of which we have to write down the bad date of rupees 3,000. Okay, this again seems to be new, little bit variated, I can say, not new. Alright. Revaluation account credit side, the very first effect, by bad date reserve account, 2,000. How? The adjustment says that you are supposed to write down the bad dates, write off the bad dates of rupees 2,000. Yes. So we have a provision for doubtful dates which is already of rupees 5,000. You have written off 3,000 from the same. So how much amount is remaining? 2,000. So this amount is to be credited in revaluation account. And in the new balance sheet, you will write down the amount of debtors as rupees 32,000. How? 35,000 minus 3,000. Yes? Alright. Let us check the next adjustment. Sixth adjustment. Rupees 20,000 is to be paid to Farshid. This is the retiring partner. Farshid is the retiring partner and is to be paid rupees 20,000 in cash. This is an important point. The retiring partner, the amount payable to retiring partner is to be paid in cash. Either it is to be kept as a loan in the form. We've understood this in the previous sums that we have solved, of course. Here it is clearly instructed that you will pay 20,000 to Farshid. So what about the remaining amount? Of course, we don't know how much amount is payable to Farshid at this moment. But when we are going to total the partner's capital accounts, we'll get to know how much amount is payable to Farshid. And they say out of the total payable amount, 20,000 is to be paid to Farshid. That simply means remaining is to be kept as a loan. Okay? So this will be done at the end. Seventh adjustment, market value of stock is rupees 54,000. What is the book value of stock? You can see on the screen, it is 53,000 and the market value they say is 54,000. Obviously the value of stock has increased. When the value of an asset increases, it is to be credited in revaluation account. So revaluation account credit side by stock account, that is 1,000. And the new value of stock in new balance sheet, you can see 54,000. Just that simple. Yes? Fine. So the last adjustment now, which is to be done at the end. We are done with the 7 adjustments except for the 6th one, adjustment number 6, and the adjustment number 8 will be done at the end. So before that, let us finish the process, other process. Okay, checking on credit side, creditors, there is no adjustment over this. So you will write it down as it is in the new balance sheet. Let us check. This is also not a new point. Creditors, 16,000 as it is. Then workman compensation reserve. This is to be distributed among partners in their old ratio. Partners capital accounts credit side by workman compensation fund. Okay? Again, not a new thing. Employees profit sharing fund. Now if you remember the concept of reserves and surplus given in chapter 4 as well as chapter 5. The concept about distribution of reserves and accumulated profit and loss. In that topic, they have mentioned about employees profit sharing fund, and they say that it is a liability and hence it is not to be distributed among partners, but it is to be disclosed in the new balance sheet as a liability. Please understand the difference between these two things, workmen compensation reserve and employees profit sharing fund or workers profit sharing fund. There is a difference between these two. Compensation reserve can be distributed and profit sharing fund cannot be distributed. It is to be shown in the new balance sheet. Here it is, employees profit sharing fund. Yes? I hope you are able to understand. Yes? Then, provident fund, again a liability, it will be shown as it is in the new balance sheet. Then talking about capital accounts, we have already written. Talking about the value of goodwill. This is the old value of goodwill, 40,000. Yes. Old value of goodwill is to be written off among partners in their old ratio. So here is the partners capital accounts, and on debit side it is two goodwill account, 20,000, 12,000 and 8,000. We also have an adjustment about goodwill. which I have asked you that you should try on your own. Still, let me just give you let me highlight the important points in this concept just for the satisfaction from my level. See, the concept is not new, as we have an adjustment of goodwill. The second adjustment, that the new value of goodwill is 80,000. What do? We'll obtain the share of retiring partner. How do you obtain? The share of retiring partner, that is Farshid. Yes, see, you can see here goodwill receivable by Farshid before the journal entry. It is 80,000 into 2 by 10, as I said, 16,000. Who is going to pay this? Fenil, of course, because he is the one who gains. And Karan does not gain, instead sacrifices. So Karan is also going to receive an amount from Fenil. Yes, so here is the journal entry. The one who will pay, his capital account will be debited, and the one who will receive, their capital accounts are to be credited. So here it is clearly written, to Karan's capital account 8,000. Now the question is, how 8,000? Understand, the value of goodwill is 80,000. How much did Karan sacrifice? Obviously 1 by 10, it is clearly written. So 80,000 into 1 by 10 is 8,000. And 8,000 is the amount to be received by Karan from Fenil. And Farshid is the retiring partner. Obviously, Farshid is again going to receive the amount of goodwill from Fenil, because Fenil is the gaining partner. And how much is he going to receive? As per his share. That's simple. 80,000 into 2 by 10, which is 16,000. The posting for this: partner's capital account on debit side, it is written to Karan and to Farshid. Now who will pay this amount to these two people? Fenil. Yes, and this is the reason the amount has been written in Fenil's column. Same for the credit side, by Fenil's capital account into bracket goodwill and amount in the column of Karan and Farshid. Yes, this is how the posting for this journal entry is. And still, if you face any difficulty, the logic of posting is mentioned in the previous video lectures. You should study that. Otherwise, you should always remember a thing, that while posting this journal entry, you are going to write amount in the opposite column to the name that you have mentioned on debit side or credit side. Alright, now you should practice this. Then let us check on asset side. Land and building, there was no adjustment, so it is to be written as it is in the new balance sheet. 2 lakh. Patents is done. Machinery, there was no adjustment, to be written as it is in the new balance sheet. Debtors is done, stock is done, and also bank is done. Opening balance for bank has been recorded. Yes? Okay. Here is your new balance sheet. You can see employees profit sharing fund, provident fund, creditors as it is in the old balance sheet. Yes, as I said. Fine then. On debit side, you can see land and building, machine, everything is as it is. These items do not have any adjustments with it. This is the reason they are written as it is. Now talking about the last adjustment, which is completely new, we are going to understand the same in the next lecture, and also we are going to balance the necessary accounts. The step of totaling, adjustment number 6 and adjustment number 8 will be done in the next session. And this is your homework for today. Alright, then we'll see you all in the next session soon. Till then, stay home and stay safe and study well.